Okay, let's start in 3, 2, 1. Jim, what's good, people? It is Jim, what's good, people? It is currently midnight. The host probably did a video for everyone. I'll mute microphone later. It is currently midnight, Jakarta time, or 5:15 p.m. UK time. Sunday, the 14th of December 2025. Welcome to another amazing episode of Mycelink Sundays. This is the 10th installment of this free weekly webinar. Every single Sunday, 5 p.m. UK time, or if you're in Bangkok or you're in Jakarta or a certain part of the world, it's midnight. Originally, we had this webinar at 10 p.m. UK time, but because of our international audience, some people in Southeast Asia and some people in the UK complaining that it was too late, we've moved it as of the past few weeks to Sunday, 5 p.m. UK time. To join this free webinar, click the link in the @Mycelink IG bio. Mycelink is a decentralized ecosystem birthed in Q4 2025 by some like-minded people, including but not limited to myself, my wife Halima, and Krog, who usually joins us, but he is currently on a flight to Vietnam. We're an ecosystem of like-minded individuals who are interested in the fields of health, wellness, futures technologies, investing, generational wealth, etc. One of the reasons why I birthed this ecosystem, which currently is a non-registered entity, is because I closed down an education company called Blockchain Sensei, which you can have a look on YouTube and see. I've posted hundreds of videos on that channel. Before we get into it, I'd just like to iterate, because I would like people to check out the replays. If you go to YouTube and type in Mycelink, I'm pretty sure you can find our channel with ease. We've only got 13 subscribers right now. However, we do have a good 5 to 7 hours of education content and replays from our previous episodes. And yeah, we hope to continue to grow, add value, and build an amazing community. Before I get started, I'd like to iterate that nothing in this video is financial advice. Myself or anybody in this webinar do not intend to be perceived or received as financial advisors. We have no financial accreditations. If you are in search for financial advice and services, I can recommend you a really good guy by the name of Tariq, who is an accredited financial professional who can get you all your legal stuff done for you, including but not limited to accounting, mortgages, etc. I'm just a guy on the internet who loves crypto and decentralization and futures technologies. Hence why I passionately put out hundreds of hours of free content. Now, let's get started with the macro. So, as some of you guys will be aware, as predicted in the last 2 webinars, the Fed, aka the American money printer, has decided to cut interest rates by 0.25 basis points. Now, I tried to make this webinar friendly from beginners and also people who've been in the market for a long time to also get some kind of value from this, which is a challenge because people from complete beginners to people who've made and realized 6 figures in the markets watch this content. But just to go over it very, very simply, what do I mean by interest rates? I mean specifically interest rates in America, because America controls the world, including financial markets. Whatever America does, the world seems to follow. Interest. What I mean by interest rates is interest rates on savings and interest rates in paying back loans and credit cards. When interest rates in America are dropped, it typically has a snowball effect in terms of an increase in risk on sentiment. So basically, interest rates go down. Typically, results in the market, the financial market, so stocks and crypto, as that's what we specifically talk about on this channel, more so crypto, but also covering stocks. Typically, the risk appetite for assets such as stocks and crypto rises because it is cheaper to borrow money on interest and loans, and there is less incentive to save because the interest rate is lower, right? So that's what happens when interest rates are cut. When interest rates increase, it is very bearish for the market, and this often signals the top of a bull market into a bear market. So interest rates right now in America are 3.5 to 3.75%. Let me just double check that. Sorry, I'm a little bit under the weather and my memory's not serving me the best. Yes, so currently interest rates are at 3.5 to 3.75%. If you go to Grok, which is my favorite AI for financial information and data, I much prefer Grok over ChatGPT and Claude. I recommend everybody tries out Grok for financial information and data because it basically scans Twitter, aka X, where the most up-to-date financial information comes from. So I've just prompted to Grok, give me the US interest rates from Q2 2019 until now. For the beginners, it's good to look at finance in terms of Q1, Q2, Q3, Q4, which is basically the first, second, third, and fourth quarters of the year. So Q1 being January, February, March, Q2 being April, May, June, etc. As this is how big money is. Big money likes to look at the market, and hedge funds and asset managers like to look at quarter closes. So as you can see, and I've said this in previous webinars as well, from 2019 all the way up until COVID, interest rates were steady/dropping. They were basically nothing throughout COVID, which is why there was so much stimulus and so much quantitative easing. And then the transition from the end of Q4 2021 to Q2 2020, Q1 2022, the rise in the interest rates basically spiked the bear market. So there's a chap on this webinar who I won't name his name, but he told me about his very, very typical story in crypto where he made a lot of money in 2021, realized a good amount, but then basically saw the depletion of his capital from many thousands to basically zero. And this is basically a trend that you will see and a story that you will hear over and over again. Anybody who's been in the markets, anyone who said they made a lot of money in the markets in the past, they typically talk about 2021. And then anyone who talks about losing a lot of money in the market, typically somebody who invested in late 2021/early 2022 and then went into the bear market. So as we can see, interest rates have been steadily dropping throughout 2025, which is good. And we expect, or through my research, I expect the bazooka, as in the money printer, to be deployed and for us to finally enter into euphoria into 2026. This is something that I've predicted throughout the whole of every single, or pretty much every single Mycelink webinar, which I encourage you guys to rewatch and visit, as we're now 2.5 months into these weekly webinars. 2025 has been a difficult and choppy year, even for veterans such as myself, because the 4-year cycle theory has been obliterated. For those that don't know the 4-year cycle theory, it's a basic theory that the year after the presidential election in the US, so that'll be now 2025, it was 2021, 2017, and 2013, and also 2009, mind you. So 2009, 2013, 2017, 2021, all these, and also, well, 2025 is now, but those 4 years again, 2009, 2013, 2017, and 2021, were post-US presidential elections. So a year after the United States of America president was elected. Those 4 years were all very, very easily predicted bull markets because the US president was elected, and then we went through quantitative easing. This year has been much tougher because, mind my language, but Donald Trump has really messed with the markets, and we have not seen quantitative easing as predictable as the previous 4 cycles. Now, I believe this has been a year of I believe that 2025 has been the year of a liquidity squeeze. So catching everybody off guard, even people such as myself, having multiple black swan events, including but not limited to all this tariff stuff. In the previous 4 cycles, which were very predictable, there was quantitative easing, and there was other factors such as the rise of the ISM, which is a big global indicator. Let me just get this up of previous bull markets. So as we can see here, this was the 2009 crash, followed the 2008 crash, followed by a 2009 rebound. This is 2013. This is 2017, 2021. As we can see, this chart has been consolidating sideways during 2025 and 2023, which is one of the reasons why we've not had a lot of euphoria. This is basically a representative of how much is being purchased across the United States by purchasing managers. The US is the biggest consumer of the world. It prints the most money. There's the most money locked up in United States bonds, which is basically fixed interest yields in America. And one of the reasons why euphoria has not hit is because this has not gone up yet. Now, another indicator which makes me very, very excited for 2026 is, let me just get it up, is this website here. So everyone can access this. It's finance.figisolutions.net. As I've said in previous webinars, liquidity has been drained from the Fed, which basically leads financial markets, and it's been China that has been pumping liquidity into the market, which is why we've seen pretty positive price action since kind of January 2024. So Bitcoin has been in an uptrend. However, most major altcoins have not seen this rise. It's been a very much institutional Bitcoin rally. We follow this nice long-term trend that I can actually pin back all the way to the bottom of the bear market, which is November 2022. So we have followed a macro bull run in Bitcoin. However, this has not yet spilled into altcoins, which is why we've not had the retail euphoria. I believe this euphoria is around the corner, definitely in 2026. As you can see, the liquidity in the Fed is the lowest it's been since 2023. And if we zoom in, just zoom in a bit and go to February 2024, we can see here that this is, well, I don't want to do too much technical analysis on a line, as that would be that wouldn't be best practice. However, I know a bottom when I see it, as I've looked at charts for years, and I can see here there's a slight turnaround in the Fed net liquidity. But more important than this turnaround and injection of liquidity, we can see here that the TGA, which is a savings account, is finally starting to drain. There's currently $1 trillion on the sidelines, or just under $1 trillion on the sidelines in the Fed. I believe this is going to shoot back down to these levels which were much earlier in the year. And then this liquidity is going to spike. Understand that when this happens, this will be reflected into risk on assets. So basically, it goes as following. The TGA falls down, which is a savings account. Liquidity is injected into the Fed. Plus, interest rates have now dropped to 3.5 to 3.75%. We expect more rate cuts to happen in 2026, especially with Jerome Powell coming to the end of his term, his 5-year reign. This guy here, he'll be leaving the Fed, I believe, in May 2026. And I believe his replacement, let me see if I'm right or not. It will either be Scott Bessent, or I forget the other guy. Basically, someone in Trump's cabinet is going to take over the Fed, in my opinion. I think it is politically and financially engineered to be so. I don't believe that anyone outside of Trump's cabinet will be elected to be the Fed chair as of May 2026, and it will just be. I think we're going to basically go through a very similar interest rate back down to at least 2%. I think that number is a number which is needed for euphoria to kick in. I don't think we're going to go down to 0% or 1%, but I think we will slash down to 2%. That is my prediction for next year from everything that I can see. Okay, so I want to read this quick article by Milk Road Macro. I think it's important to also look at both sides of the argument with regards to interest rates. Okay, so everything you need to know about what happened at the Fed meeting. So the Fed meeting was just a few days ago. We made it through another Fed week. The Federal Reserve Chair Jerome Powell delivered the 25 basis points interest rates cut that was expected by the markets, and it's been confirmed that balance sheet expansion will begin again. But the picture looking further ahead gets murkier from here. The Fed is currently stuck in an awkward position and is heavily divided. By heavily divided, we basically have an American president who is a Republican and Jerome Powell, who's basically a Democrat. The Fed is currently stuck in an awkward position, blah, blah, blah. On one hand, inflation remains elevated, suggesting that rates should not be cut. While on the other hand, there are signs of weakness in the labor market, suggesting rates should be cut. So what is meant by this is when interest rates are cut, more money is printed, and therefore inflation remains elevated, right? So the price of goods. And the reason why we pay attention to America is because, again, America rules the markets, and everything else is basically, or historically speaking, an exacerbation of what America does. When America takes its risk off in the market, the world typically follows. When America starts printing, the world typically follows. Right? So, while on the other hand, there are signs of weakness in the labor market, suggesting rates should be cut. When there's a weak labor market in America, typically the interest rates are cut, so more money can be printed, so more jobs can be given out. So this is kind of the two sides of what's fighting for and against interest rates being cut. So what did we learn from this week's Fed meeting? What's the outlook for next year? And is QE or quantitative easing back? Will quantitative tightening stopped at the start of this month? So I believe so. A divided Fed. This meeting revealed just how divided the Federal Reserve has become. I believe there's 11 to 14 board members in the Fed. We saw 3 official dissents voting members explicitly disagreeing with the decision to cut rates by 25 basis points, the most since 2019. 2 policymakers, Jeff and Austin, dissented in favor of leaving rates unchanged. The other dissent came from Stephen Miran. Okay, that's the other guy who might be taking over the Fed. Okay, this guy here, yes. It's between Scott Besson and this guy here, who I think are going to take over the Fed. Um, the dot plot which shows where policy thinks rates should be in future showed that six FOMC members thought that there should have been no cuts at this week's meeting. In his press conference, Powell said a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool, you can't do two things at once. It's a very challenging situation. This could be a signal that the next Fed chair, who will take up the role in May 2026 when Powell leaves, may face big challenges if they attempt to gain consensus for further rate cuts next year. Outlook for next year, we've had three 25 basis points cuts to finish off 2025. This is extremely bullish for the market, by the way. Three cuts already this year. Remember, the market doesn't just react to cuts immediately. Typically, there's sell the news events, which I did predict was going to happen last week. Buy the rumor, sell the news, right? That's how it goes in investing. The market prices in good news before, and when the good news actually happens is the day that the market typically takes a dump before recovering again on the fundamentally good news. The markets have had high interest rates. Let's not forget that up until June 2025, interest rates in America were 5.25 to 5.5% on borrowing and loans and credit cards across the board. And also, Americans got this in fixed interest rates in their savings. So, of course, the appetite for risk is not going to be so high. If you imagine where we are now at the end of the year, that's now dropped to 3.75%. That's a whole 1.75% cut in interest rates. That's a lot, which positions us very well for 2026.
Ninja, just to interrupt you a second. Do you not find the
Fed predicts a
interest rates?
Goldilocks environment. We also saw an update in the Fed's summary of economic projections. This shows that members as a whole, yeah,
Can you hear me, mate?
yeah, go on.
Yeah, just a quick one. Do you not find that the interest rates tend to drop towards the end of the year every year anyway? It definitely does in the UK.
Yes, sir.
From someone speaking from a wealth standpoint, I'll speak from the UK's behalf. So the reason why it drops every year, Q4 in the UK or stays the same, is what's happening with the banks, especially retail banks. They're competing. Bit like Black Friday, everyone wants that discount. Banks and banks borrow hundreds of billions of pounds, dollars, different currencies every year when they loan it out in terms of credit cards, personal loans, mortgages, debt. When they're giving away debt, they kind of want to give away that whole debt before the end of the year is finished. And that's why they'll drop the interest rates and they'll start competing with each other to try remove um, that debt that they've borrowed and then start again fresh from Q1.
Before I comment, let me just get them up. Tell me interest rates in the UK every quarter since 2015. Let me see. Because I actually don't pay that much attention to UK interest rates. Let's have a look.
Yeah, so it tends to drop or stay the same towards the end of the year, which
So in
causes retail
2015, they held
banks.
steady at 0.5 for the whole year. In 20, mm,
You gotta look at the
there was a hike.
comparison. You gotta look
Okay,
at
in
the
2017,
comparison
there was a
between
hike in
look
November.
at you wanna look at the comparison
Hike.
between base rates and what retail banks are offering.
Yeah, I'm just trying to.
For example, I did a mortgage on Friday for 3.2%. The last time I did that was a little while ago.
Uh,
We'll discuss it in a little bit, a bit later, me and you, Ninja. I cut your flow. I
Hmm.
cut your
Okay,
flow.
so I'm gonna be honest. I don't know. I don't. Yeah, maybe. No, that's okay. I'll answer as best as I can. I am not aware about a end of year trend for interest rates to drop. Um, in the UK. However, I will say that I'm a strong believer, this is just my opinion, that the UK has no impact on global financial markets when it comes to risk on assets. Like I don't believe anything that the UK does. I have never ever in the study of in my personal study of the stock market and crypto ever seen the UK do anything that affected the price of the S&P 500 or crypto. So I will comment on that. You can tell me if you think that the UK has any impact on the risk on appetite of American stocks or AI or crypto, but I have not seen any proof that when the UK did anything from dropping interest rates or increasing interest rates or quantitative tightening or quantitative easing or any shift in policy, despite being like the third biggest Bitcoin holder in the world, which I will say, um, I focus on what affects global risk on appetite, stocks and crypto, and I haven't seen the UK affect global markets. So I will say that I don't have any opinion on UK banks dropping interest rates at the end of the year. However, I do have an opinion that I don't believe there is a trend in the Fed in America where interest rates are dropped at the end of the year. I think that America forever forever calculating how it as a nation can continue to be the world superpower. And I believe that America, especially with Trump, considers dropping and increasing interest rates um, in, I guess you could say, sorry guys, I'm really tired today. I believe America drops and increases interest rates with with its country positioning being the global superpower in mind and benefiting most from the financial markets. That's what I believe. But let me add in one prompt. Um, my friend who is an accredited UK financial practitioner practitioner says he sees a trend where UK banks drop interest rates at the end of the year to lure in what credit card spend?
No. UK retail banks. So the way UK retail banks work in the UK
As
is
one of the reasons.
they borrow money from the interbank market. So the Bank of
Uh,
England. They'll borrow the money. And once they borrow the money, that money is on an interest rate, normally what the Bank of England interest rate is. Towards the end of the year, those debts that they've
uh,
borrowed from need to be, well, it's in favor for the bank to get rid of all that cash or maybe a cheaper interest rate
mhm,
towards the end of the year. So often in Q4, when it comes to why I'm talking about mortgages in the UK is because debt's one of the biggest industries within the UK, and the mortgage is one of the leading ways that the UK develops its market. So when it comes to mortgages in the UK, retail banks will always compete in the last quarter for dropping their interest rates when it comes to lending. You can see this across the board when it comes to certain credit cards as well for certain people with certain credit limits, and also personal loans and business loans. But what they do is say for the whole of Q3, let's just say for simple terms, banks were trying to keep their interest rates above 4%. In Q4, you'll normally see it drop a couple points, 3.8, 3.6%, so they can offload the rest of that debt that they have to their name and sell it. They're selling the debt. So then when they come into the new financial year, they can re-borrow debt at the newer interest rate from the Bank of England and keep themselves profitable. The way I see it is like a Black Friday deal. Get your money now. They're trying to sell away all that debt. So a lot of my clients that are looking to buy houses through mortgages in the UK, what we'll do is we'll
Okay.
normally fix them a rate in Q3 and then look at Q4 and see if Q4 would offer us a competitive rate towards the end of the year. That's just from my experience. It's happened every single year. I've done mortgages every single Q4. I get more competition from
Okay.
retail
Well, what you're
banks.
saying makes sense. And according to
And so the reason I brought it up was, do you not think that's also another major reason why America is changing interest rates, cutting them? There's so much
well,
volatility.
let's just go over what you. No, I don't believe. I, I always believe that America's policy is obviously a country needs to obviously a country. I'm gonna get back on a webinar soon, but I appreciate the challenge of asking me these questions. By the way, guys, Tariq is actually a accredited financial practitioner, of which I am not. But I
So the
do not
question,
believe, right? I believe that the ways so the way the UK plays is go on,
yeah. So just quickly, do
go
you
on, what
know
is the
do you
question?
know do you know when America's so do you know what portions of debt they have and when they need to be refinanced? So that's often another trend on how interest rates are calculated because in a market where there's stress on labor, there's
Do
there's
I
a
know
lot of
what portions of debt America has and when they need?
refinance that debt. Yeah, so that'll be a key thing. I try to find some information about is when America has to refinance certain parts of their debt, and that will be a big indicator on why interest rates move. Because at the moment in the UK, right, you're very right. So if for the UK, what the working population wanted in the UK is they wanted the Bank of England to drop their interest rates below 4%. In the UK, it doesn't work quite like America. What the Bank of England said is, you know what, we're actually going to keep our interest rates the same, um, and we're going to leave it at that. Why the working population wanted them to drop the interest rate, which means it just basically means that their debt that they have to pay back to the banks is a lot cheaper. Um, if the Bank of England increased the interest rate, what it would do is it would support the economy because the Bank of England is increasing the amount of money that's coming in from debt. So people are paying more amounts for debt, but the working population will suffer. Another variable that a lot of these countries have to take into consideration when it is calculating interest rates is to do with what debt that country has and when they need to refinance that debt. So a lot of countries, a lot of people do this. Is what they do is they either inflate or deflate their currency when it comes to refinancing or borrowing more debt. So when a country is looking to borrow more debt, what they tend to do is they tend to increase the value of their currency for manipulating debt that they currently have. So then borrow at an advantage for them. Their currency is worth more. They get more out of their buck. When it comes to refinancing the debt, what they tend to do is they tend to knock the dollar, knock the cost of what there is. So when they're refinancing at a smaller valuable a smaller value pot than what it's really worth. I don't know if that makes sense. I think you're muted, mate.
Okay.
Oh no.
No, no, it does make sense, but I don't understand what your question is. Like I understand all the points that you're making, but I'm just trying to relate them to. Sorry?
So the question is, right, do you not think another main reason why the Fed rates have cut
Okay.
is to do with them
Yeah, so
refinancing debt that's a bit that's
just
coming that way?
yeah. Um I could be wrong. I could be wrong, but no. Like I believe that America's interest is always to be able to manipulate the financial market. And that maybe I'm wrong in that sense, but I've found that me paying attention to like everything I do always comes back to how can I extract the most money out of the market, right? In the midterm. That's what I always care about the most. I care about what's happening. I and that sounds crazy, but I don't care or don't pay attention to, and this is my strategy, right? Not credit financial advisor. My strategy to be able to extract value into the market, which is the baseline of the information that I give out, right? So people can make money in the market in stocks and crypto, is I always want to care about what's happening in the next 3 weeks to 3 months. The 6 to 9 months, too many things in the world can happen in after 3 months. So I believe whether I'm and I could be wrong. I believe that the reason for interest rates dropping and interest rates rising is so America can profit the most from the stock market. Maybe I'm wrong, but anyway, right? We're not going to discuss this anymore because I don't want to blow everybody's heads off. Um, but according to Grok, there is no historical trend where interest rates drop towards the end of the year. Um, Although I do, thank you, Tarek, for giving us that information with regards to retail banks, as that makes sense. Um, okay, so let me go over to Milk Road. Finish off the article that I didn't finish before. The Fed predicts Goldilocks environment. What do they mean by this? We also saw an update in the summary of economic projections. This shows that members as a whole raise their forecast for GDP growth and lower their forecast for inflation in 2026. I'm not going to pretend like I know what these numbers mean. But in summary, an environment with growth rising and inflation falling is often labeled as Goldilocks environment for markets. If true, this prediction would likely be good news for risk on assets. Okay. What do I want to look at? What do I want to look at? You know what? We'll review that next week as these screenshots are shit. Um, okay, so this is an excerpt from 42 Macro's lead off morning note. Who are 42 Macro? 42 Macro are a second. So they are an online investment research provider, and they basically do a report every single day. I'm not actually subscribed to them, but my professor is, and he shares the excerpt every day. And the basic summary is it is believed through the research of 42 Macro and also other reputable sources such as Cross Border Capital by Michael Howell, who focus on global liquidity, that next year we are primed to enter. We're primed to enter euphoria, much like the season we entered in 2021. We expected this to happen in 2025, following previous bull market cycles. Again, I'm just gonna load up the ISM. Yeah, the 3 previous bull cycles that followed the ISM, the 3/4 previous bull cycles, which followed basically the rise of the yuan and the fall of the US dollar in terms of strength. Also following the Bitcoin halving cycle, which I won't go into during this webinar. So basically, an array of predictable cycles, which have not been so predictable in 2025. I believe that 2026 we will see such environments. One second. What do I want to get from here? The Trump administration continues to guide the U.S. economy towards Paradigm C, which features a fiscal and monetary blah blah blah. You know what? I want to skip through this. As I don't have my highlight points right now. I'm sorry, guys. I'm super tired on this webinar. Okay, let's go through some technicals. As they're the easiest to read. Easiest of all to read. Okay. Also, for those that haven't been on this webinar, my wife does an interlude, a health and wealth meditation, which she's going to do in the next 10 minutes or so. So if you have a look at coinmarketcap.com, which is the #1 website in the world for cryptocurrency information and data, you can see here that we are still in extreme fear, which is great because, as Warren Buffett says, be greedy when others are fearful and be fearful when others are greedy. You can see here the fear and greed index has exited from extreme fear to now fear, which is great. I believe we are trending upwards and the bottom is in. If you look at all the money in crypto right now, we're sitting at $3 trillion. On the 1 week and the 3-day, this is absolutely perfect technicals. I know a lot of people like to do technicals first because this is what people want to see, right? People want to see green charts and red charts, etc. But I like to start off by talking about some macros as they're actually more important than the technicals themselves. But when you have technicals and macros lined up together, it is the perfect inflection point of analysis. You can see here on the RSI on the 3-day, the purple is about to cross the yellow, which is a sign of bullish momentum. We can see here that on the 3-day, we're exiting from bearish exhaustion into bullish momentum, and the 12 and the 26 moving averages are about to cross. Pretty much perfectly trending since October 2023. Smash straight on the trend line. I believe we are going to go back to October 2025, 4 trillion heights and beyond in the near future. Near future being sometime in Q1 2026, with 40% from the crypto total market cap all-time high, which is very, very good news. Total 2, pretty much exactly the same on the technicals. Total 2 is the market including Bitcoin and Ethereum. Total 3 is the market excluding. My bad. Total 2 is the market minus Bitcoin. Total 3 is the market minus Bitcoin and Ethereum. Pretty much identical charts. And then others is the whole crypto market minus Bitcoin, Ethereum, and your top 10. So basically all your altcoins. This is not yet primed. If we look at the charts, if you look at total 2, total 2, total 3, we can see that these 3 charts are pretty much identical and are primed to break out. Whereas total 3 is still meandering in this consolidation / downtrend. We may have one more further leg down for altcoins before seeing altcoins rise. I don't believe this is an uptrend yet. My eyes, through years of analysis, are telling me that this is going to go sideways first before rising. With Bitcoin and Ethereum, right? Bitcoin is an amazing buy zone right now. I think the lowest we're going to go to is 84K. I don't believe that we will ever see, unless we have a Black Swan event, this is my prediction, I don't think we're going to see 74K BTC again for a very long time. A very long time in my eyes being from Q1 to Q2 2026, unless we get some kind of Black Swan event. I believe the bottom is in for BTC. I'll be very surprised if we see 80K again. I think the lowest we're going to go is around 85K, which will go back to this trend line. Ethereum, I believe also the bottom is in. I doubt we'll see 2.65K again. Do I think we're going to see some Ethereum chop? Yes, for the rest of the month. We have broken this uptrend, and I think we're going to retest 2,894. If you want to put that as a buy. Let's have a look at the ETH BTC ratio. Excuse me. This is the price of Ethereum denounced in Bitcoin. I believe that. So, what to notice on this chart, right? When this chart goes up, so here in 2017, here in 2017, from the end of 2020 all the way till 2022, ETH outperformed Bitcoin, and in this time period is basically where you see euphoria. We are only starting to outperform. We're starting to see Ethereum outperform Bitcoin, and as this goes up, this will basically be when you see your altcoins go up by a lot, which is basically why we've not seen altcoins rally. I see here very nice on the MACD. We see the 12 crossing the 26, and we see flashes of bullish momentum. This is very, very good for altcoins. We might see some more chop, but otherwise, I see altcoins doing very, very well. Let's have a look at Dogecoin. I believe the Dogecoin bottom is pretty much in. I'd be very surprised if we see Dogecoin decline much further than today's price. I'd be very surprised if we see 11 cents, which is the lowest I believe Dogecoin is going to go. But otherwise, I think Dogecoin is not financial advice, but I believe Dogecoin is a great investment at today's price if you're looking to accumulate. Favorite investment in the market right now at today's price is Solana. Not because I'm a Solana maxi or anything like that, but because I truly believe that this is one of the greatest risk to reward assets on planet Earth right now at today's price. Keyword being today's price. If Solana goes to $179, that consensus will change. I think this is an easy range to capture at today's price. I think the lowest we can go to is 124 for accumulation, but I'd be very, very surprised if Solana doesn't hit back to these all-time highs or near all-time highs sometime in Q1 2026. I know that's a very, very bold statement, but let it be known that Solana is $130 right now, and I'd be super surprised if we don't swing back up to 251 before quarter close in Q1 2026. Another great swing that I believe will be an amazing accumulation, which is much higher risk than Solana, is TON. This is the Telegram, the official Telegram coin, currently sitting here super undervalued as a 26th biggest crypto at $4 billion market cap. If you look into TON, I think you will agree that this is extremely undervalued. I don't know when it's actually going to turn around, so I don't want to give like a timed price prediction for TON, but I believe these are generational buys on TON at 5x from its high in June 2024. It's hard to predict when this is gonna break out of its downtrend / consolidation, as I don't see any technical signs of this happening. This could meander here for a long time and only go up in the second half of 2026. I don't know yet, unfortunately. Everything is bullish on ton with regards to fundamentals, but there's a time value of money, which is why I wouldn't say deploy everything in ton. Where I can say Solana is basically at the generational low, and it has a pattern of springing up very, very rapidly, very, very quickly. Let me just remind you guys, in recent history, we were here around this price in June 2025, and then we reached this price here in September. July, August, September. That was a 3-month gap. I think we're going to do the same in the next 3 months. I'd be extremely surprised if by quarter close in 2026 we're not back up here. And that quarter close is 105 days away. Last but not least, I don't want to go over too many charts. We'll go through Pengu. I think this is the Solana beta. If you want something higher risk and higher reward than Solana, then I don't think anything will provide you that with as much quote unquote safety, even though there's no such thing as safety in crypto, than Pengu. These guys are a multi-million-dollar IP, and I think they're going to reach $1 billion in intellectual property valuation if they haven't already. Let me just do a quick grok. Then I'll let my wife do the meditation. Oh, sorry guys, I'm super tired from Thailand. I usually have way more energy than this. Are you able to provide a valuation of the Pudgy Penguins IP company, not including the meme point and NFT collection? So just the toys. I wonder if Grok is able to do a valuation. But yeah, for those that don't know, look into Pudgy Penguins. Potentially the greatest intellectual property play in all of crypto. All their toys are in every single Walmart in America, in most major Japanese retail stores. And they're currently 75 in crypto, which is pretty crazy. Obviously, this is what you got to think in crypto, right? There is so many 500 to 1,000% you can do in crypto. And I don't want to sit here and name every coin because a lot of these coins are going to go to zero, right? But in the process of something doing 10x, you are going to eat so much drawdown. It is unbelievable. There are people who bought Pengu up here, right? And the current investment is down 71%. But even if the people who bought here didn't buy any more, which they should, in my opinion, to bring down what's called the average price, crypto is one of the only worlds. I mean, there is the stock market as well, but crypto is most known for the world where you can buy something up here, eat 70% drawdown, and still realize in the future, and still realize 600% in the future. It's just the people who bought here haven't sold, haven't bought anymore, and will ride it up here. They may make that 600%, but will they, have they invested enough to change their life? Most people don't invest enough to change their life. And then most people don't do enough research to understand that volatility is just part of the process. So, yeah, do I think Pengu can do 10, 20x? Yes. Do I recommend that you hold until then? No, because there's a time value of money and nothing in this world is guaranteed. There is only $0.6 billion invested in Pengu. And in the previous cycle, Dogecoin went to 70, 80 billion, which is a 100x multiple away from Pengu. Many of these things may not click with people watching now or in the future, but I hope to be historically correct. What else? I'm just gonna go over some stock picks. I believe Coinbase is one of the greatest risk to reward opportunities in the market if you want to accumulate some stock. I honestly think that this stock next year will hit at least $600. The all-time high of Coinbase is $420. Isn't that funny? That is around 420. As the stock IPO'd into the public market in the middle of the bull market in April 2021. We are now 4 years later. There's way more money in the world. We're about to hit euphoria. This will absolutely hit all-time high for sure. I'm 99% confident, as long as we have no Black Swan event, as long as the world doesn't lock down because of some virus and Trump doesn't get shot, this company will swing back to all-time high in no time. No time being, and I'm putting my name on all these, I'm putting on reputation on all this. No time being by March 2026. It's going to swing back to this high in that time, at least, and probably break all-time high. In that time, we can swing down to 229, which would be a 16% drawdown. But I think I strongly believe that Coinbase is a huge buying opportunity in the market. Mind you, Coinbase are the custodian, so the holder of most Bitcoins in all the Bitcoin ETFs, which are the exchange traded funds which allow institutions to buy Bitcoin. That's my stock pick. Besides that, what else have we got? No. I basically don't like calling out stocks that are high because I don't. You see the stock here? If you want to make 50% in the stock market with relative ease, with potential 11% drawdown on the way, I don't think it's going to go lower than that. That's kind of you got to calculate, right? This is an easy pick. Could Tesla do 50% from here? Yes, of course it can do anything, right? But I just don't know. I don't know when Tesla's going to go to $700. I don't know. It's too difficult to predict. I just don't know. It could happen between now and March 2026, but there's just no blueprint for it to go to. Like, you want to buy things at the low when it makes sense. This is really, really good technicals as well. It follows the trend line. It follows the narrative. It makes sense. You could accumulate something like Snapchat or PayPal and hope that these things recover at some point. But, when are they going to recover? I just don't know. It's been in this consolidation for so long. I just don't know when these things are going to recover, right? I say all these things because I don't want people here to ride sunk cost fallacy, which is basically where you hold on to things for no reason besides your cognitive bias. I don't want to call out a load of stocks. Let me see if I see anything right now. You could argue MicroStrategy is in a huge bargain right now. I like this, but not as much as Coinbase. The reason why I don't like this as much as Coinbase, for those that don't know, MicroStrategy, one of the biggest stocks to hold Bitcoin, is this chart has not formed an uptrend by any technical metric. And it's too unpredictable for me when I look at this chart to say this is going to swing up. I mean, if it does swing up, you're going to make crazy money. That's 150% from the high. But it fell off so quick that I just don't know how quickly it can recover. So if you want to beta play to Coinbase, which is a clear 50% in my eyes, you can buy a MicroStrategy in the stock market. I'm going to leave it there. I might take some Q&As at the end. We'll see. Halima, are you ready?
Yes.
Okay. Would
Hello, everyone. Just give me 1 minute, guys. Babe? Yeah. Can you repeat the affirmations?
Yes, I will repeat the affirmations.
Can you come here, closer to the mic?
Yes.
Thank you. Hello, everyone. Welcome to this guided meditation for crypto abundance and generational wealth. Close your eyes and focus on the sound of my voice. Allow your body to become completely relaxed. Release all tension from the markets, from volatility, and from fear. Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. Today, we are on a journey into the digital realm of infinite abundance, where blockchain meets consciousness, where your wealth frequency activates, and where you align with the next wave of prosperity. You remain fully aware and present, absorbing every word. You're going to be deeply relaxed. You will stay awake and let your body and mind relax. Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. Now, I want you to visualize yourself standing in a vast digital landscape, a luminous space where golden Bitcoin symbols float gently around you like fireflies. Ethereum crystals pulse with blue-violet light beneath your feet, creating a pathway forward. The air hums with the frequency of opportunity. You can feel it on your skin. Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. You begin walking forward on this glowing path. With each step, Solana tokens appear like purple stepping stones guiding your way. Above you, charts and candlesticks dance like constellations, green candles rising, expanding, multiplying. You hear the sound of blockchain confirmations like gentle chimes, welcoming you deeper into this space. A golden wallet materializes in your hand. It's weightless but powerful, holding unlimited capacity. Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. You arrive at a magnificent sanctuary of wealth, the center of the bull market. A crystal clear waterfall of liquidity flows below you, endless and abundant. The S&P 500 climbs steadily upwards, painting the sky green. This is your wealth sanctuary, where we activate your crypto prosperity consciousness. Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. Standing in this digital clearing of pure potential, repeat each affirmation out loud after me and feel the words encoding into yourselves. Here we go. I am a crypto wealth magnet.
I am a crypto wealth magnet.
Bitcoin flows to me effortlessly.
Bitcoin flows to me effortlessly.
I buy low and I sell high with perfect timing.
I buy low and sell high with perfect timing.
Altcoin seasons bless me abundantly.
Altcoin season bless me abundantly.
I am aligned with the bull market frequency.
I am aligned with the bull market frequency.
Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. Ethereum multiplies my wealth exponentially.
Ethereum multiplied my wealth exponentially.
Solana opens doors of limitless opportunities for me.
Solana opens doors of limitless opportunities for me.
My portfolio grows while I sleep.
My portfolio will grow without I see.
DeFi and Web3 amplify my generational wealth.
DeFi and Web3 amplify my generational wealth.
Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. I am protected from rug pulls and scams.
I am protected from local and scams.
My intuition guides me to profitable trades.
My intuition guides me to profitable trades.
I hold with confidence and diamond hands.
I hold with confidence in diamond hands.
Market dips are buying opportunities that I recognize instantly.
Market dips are opportunities that are instantly.
Inhale from your nose for 4 seconds. And exhale from your mouth for 6 seconds. I create generational wealth through blockchain technology.
I create generational wealth through blockchain technology.
My family's future is secured by my decisions today.
My family's future is secured by my decisions today.
Web3, AI, and crypto work together for my prosperity.
Web3, AI, and crypto work together for my prosperity.
I exit at the top with clarity and precision.
I exit at the top with clarity and precision.
Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. Money seeks me out in bull and bear markets.
Money seeks me out in bull and bear markets.
I am financially free through decentralized finance.
I am financially free through decentralized finance.
I compound my gains with wisdom and strategy.
I compound my gains with wisdom and strategy.
The Mycelink ecosystem multiplies my wealth consciousness.
The Mycelink ecosystem multiplies my wealth consciousness.
Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. I am a prosperous visionary in the digital age.
I am a prosperous visionary individual.
I am surrounded by parabolic gains.
I'm surrounded by parabolic gains.
Every opportunity I need finds its way to me.
Every opportunity I need finds its way to me.
It's easy.
It's easy.
It's fun.
It's fun.
It's uplifting.
It's uplifting.
Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. Now, see your future self 1 year from now, your portfolio transformed. Bitcoin at the new all-time highs. Your altcoins have 10x, 20x, and 50x. You made the right calls, you held through the noise, and you trusted the process. Golden light surrounds you, the light of financial freedom. Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. You understand you cannot be poor in a prosperous vibration. You understand crypto wealth is your inheritance in the digital age. You understand the bottom is in and euphoria is coming. Everything in your crypto journey improves. Every trade, every hold, every decision. You've got the vision. You've got the diamond hands. You're building wealth beyond what you've dreamed of. You're so relaxed. You're so powerful. You're so powerful. Inhale from your nose for 4 seconds. Exhale from your mouth for 6 seconds. Now I'm going to count from 1 to 10. With each number, you'll return from the digital space, carrying everything we've created together. 1, 2, you begin your journey back, feeling empowered and aligned with crypto abundance. 3, 4, new wealth energy flows into every section of your being, every cell in your body. 5, 6, it's a phenomenal frequency, lifting you to a higher level of prosperity consciousness. 7, 8, everything is programmed into your mind. The bull markets, the gains, the strategy is in the cells of your brain. They're at will. 9, you're almost back now, carrying all this crypto abundance with you. 10, wiggle your fingers and toes. Blink your eyes open and become aware of the relaxed and powerful, wealthy state you are in. You've walked through the digital space of infinite possibility and now carry it within you. The super cycle is yours. The wealth is yours. The future is yours. Thank you for listening.
Jeez. Starting off there. Should have started off there. Amazing. Thank you, my love. Thank you.
You're welcome.
All right, you mute yourself.
Yeah.
All right. Do you want to meet yourself? Righty. All right, guys. I'm usually way more energetic than today, but I can't lie. Traveling killed me off. All right. Let me take some questions. Josh, how are you feeling? How you doing? I'm sorry today wasn't the most high energy one. I'm usually more high energy than this. But yeah, I know you're he's in a hostel right now. I don't know if you can hear me.
Yeah, I can hear you.
If not, we're going to David. Mm-mm. Oh, Josh is here. Any questions, bro, for our 101?
Not really. I haven't really got too many questions. Obviously, I don't really know too much about all of this. I'm relatively new to this, but yeah, I mean, I definitely learned quite a bit. I've taken some good notes, and yeah, I just appreciate the time here. Thank you very much, and also that meditation was lovely. Thank you.
Thank you.
I'm glad you enjoyed that, bro. She's my wife's my secret weapon for sure. All right, cool. Let's get that. Technical problems. Yeah, let me. I'm gonna message you personally, And then yeah, we'll get that 101 in. And yeah, appreciate you tuning in from your hostel at midnight in Thailand as well, bro. Shows a lot of dedication.
Enjoyed it.